Welcome to Money Talks with Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, U.S. President Donald Trump says no room left for Canada and Mexico to avoid tariffs. The stock sell-off deepens. Yield plays and bonds all the rage as investors here seek shelter. As the world waits on China's response, Beijing prepares for its stimulus plan at the annual political huddle. There is no room left for any deal to avert the tariffs set to be imposed on Mexican and Canadian goods when Tuesday arrives in the U.S. President Donald Trump says the 25% duties on Mexican and Canadian goods will take effect on March 4, stoking fears of a trade war in North America and sending financial markets reeling. An additional 10% tariff on Chinese goods will also be imposed on top of the 10% duties last month and other levies during Trump's first term. Reciprocal tariffs will begin on April 2 on countries that impose duties on U.S. products. Failure of both countries to curb the entry of fentanyl into the U.S. is the primary reason why the Trump administration is pushing through. Economists warn that the tariffs would deal a serious setback to the highly integrated North American economy. Price hikes are also imminent in the coming days, particularly in the automobile sector. Other experts are worried Trump's agenda could keep inflation higher and tip the global economy into recession. Trump appeared earlier at the White House, where he cemented his tariff plans.
The tariffs, as you know, will start a week earlier than the reciprocal, which is going to be on a couple of weeks earlier. Reciprocal tariffs start on April 2nd. But very importantly, tomorrow tariffs 25% on Canada and 25% on Mexico, and that'll start. So they're going to have a tariff. So what they have to do is build their car plants, frankly, and other things in the United States, in which case they have no tariffs. No room left for Mexico or for Canada. No, the tariffs, they're all set. They go into effect tomorrow.
China's legislature is set to meet for its annual assembly starting Wednesday, with Premier Cathy Yang expected to announce the country's economic growth target for the year. Analysts expect Beijing will keep its 5% target, as with the previous 2 years, but slightly lower than the 5.5% goal in 2022. China's economy is reeling from its sluggish real estate sector and lackluster consumer spending. Trump has also targeted China with multiple tariffs, from 10% duties last month to an additional 10% starting on Tuesday. The world's largest chip manufacturer will invest more than $160 billion in the U.S. over the next 4 years. Taiwan Semiconductor Manufacturing Company, or TSMC, will bring its advanced operations in the state of Arizona to produce AI and smartphone chips. The company is expected to open 25,000 jobs. Trump lobbied in his first term for the semiconductor giant to build plants in the U.S. The Biden administration advanced those efforts by passing the CHIPS Act in 2022. Following Trump's announcement, U.S. markets have slumped, with the S&P 500 posing its biggest decline so far this year. By the end of Monday's session, the S&P fell by 1.8%. The tech-heavy Nasdaq fell by 2.6%, nearing a correction as the index is now just over 9% below its high in mid-December. And the Dow slid by about 1.5%. Investors also digested new data from the Institute for Supply Management showing supply costs of U.S. manufacturers jumped in February. An official from the Institute of Manufacturers said they were now experiencing, quote, the first operational shock of the new administration's tariff policy. Let's take a look at Asian markets. They have opened lower today after Trump made it clear that tariffs on Mexican and Canadian goods would push through. As you can see there, the ASX 200 and Japan's Nikkei 225 both down over 1%, along with South Korea opening for the first time this week It's falling by nearly half of 1%. Let's take a quick check on the local markets now and see how we're doing as investors await tomorrow's inflation data. So that's a key data point that we're watching here. PSEI has opened up a 0.1% at 6,040, just below 6,100. Philippine shares have returned to the 6,000 mark on Monday because of bargain hunting. Let's take a look at the Philippine peso, see how that's doing. Looks like a stronger open right now at 57.83 against the dollar. The peso closed yesterday, that's Monday, stronger at 57.90 to the dollar. So, how wary should we be of Trump making good on his tariff threats? Let's start by getting a baseline on our own Philippine trade balance, because figures last Friday revealed the Philippines' trade deficit widened to its biggest in 3 months. That's a little under $5.1 billion there. That is also the widest that we've ever seen it in 2 years, right about this time in 2022. So why did that happen? Imports went up to new 3-month highs. As you can see right here, that little blip up there, that's up from the lowest in nearly 3 years, in part because of lower prices of major global commodities, which in turn reduced our import bill. Let's take a look at exports, because that went up to new 5-month highs, an even bigger jump there from the lows that we hadn't seen since 2022. And that's in large part because of a weaker peso exchange rate versus the dollar, which made exports more affordable for our international buyers. So what do we export? Let's take a look at that list here. Got a couple there of other manufactured goods, coconut oil, mineral products, among others. And what did we import? We imported and bought a lot of electronic products, telecoms equipment, electrical machinery, mineral fuels, lubricants, all the stuff that need to make this economy churn. So what could turn out to be that big threat to Philippine exports to the U.S. is reciprocal tariffs, because that's a 17.7% of the market right there, the export market from the U.S., topping that list. The U.S. is our biggest export market. And in terms of imports to the Philippines, the U.S. is the 5th largest source at 6% of a share. So the proposed higher tariffs could be broader and have far more serious impact than Trump's trade war during his first term, says RCBC's Mike Ricafort. But he adds, while it is from our trade surplus with the U.S., where we may be hit by Trump's reciprocal tariffs, our trade surplus with the U.S. is way narrower than the trade surplus of China with the U.S. So mirroring that view is my recent conversation with Citi's Joanna Chua from Hong Kong.
In Asia, I think Philippines is kind of second to India, being the most insulated from kind of the tariff noise. And one of the benefits India has is there's been a lot of interest in diversion of investments in manufacturing China plus one.
And the gloves come off as the most significant global trade war in almost 100 years could be well underway, says our next guest. With us now live from Denpasar in Indonesia, former U.S. trade negotiator and visiting senior fellow, Institute of Southeast Asian Studies, Yusof Ishak Institute, Stephen Olson. Stephen, so good to see you again. Welcome to the program.
Well, always good to see you, Cathy.
You know, the first time we met was during Trump's first term and first trade war with China. How is his second round of trade wars now looking to you, and now involving the world's biggest trading partners, apart from China?
The more things change, the more they stay the same, I suppose. Look, Southeast Asia, the Philippines were able to emerge largely unscathed from Trump 1.0. In my judgment, that will not be the case in the current administration. And I think these reciprocal tariffs, as you mentioned, are really going to be a significant factor. Philippines maintains higher tariffs on average than the United States, and in particular on agricultural products, the Philippine tariffs are considerably higher. But I think just to level set on this issue of reciprocal tariffs, it's worth pointing out that referring to them as reciprocal tariffs is actually a bit of a misnomer. What we're really talking about here are reciprocal tariffs on steroids, because the United States is not simply going to raise their tariff level to match that of other countries. They're also going to consider a whole host of non-tariff measures, subsidies, exchange rates, excessive regulation, et cetera, when calculating this the reciprocal tariff. So, for example, a country that maintains a 10% tariff on U.S. Exports of automobiles, do not assume that your reciprocal tariff could be 10%. It could be 15%, 20%, 30%, or higher when we factor in these other issues. I'm not suggesting that the Trump administration will pull tariffs out of thin air, but they're really giving themselves a wide degree of latitude here in setting those reciprocal levels.
Stephen, I'm hearing here two things. There's tariffs and there's reciprocal tariffs that we hadn't had before, and the maths that come along it. I got lost there, but if you put it into context, and as you're in an ASEAN country, and we're ASEAN neighbors with Indonesia, where do we stand here in the Philippines in terms of the severity of the impact of both the tariffs and the reciprocal tariffs?
There's a couple of issues. Certainly, the Philippines will be hit hard, but if there's any consolation, I think some of the neighboring countries will be hit even harder. And I say that for a couple of reasons. As a share of overall GDP, for instance, Thailand and Vietnam have substantially higher portions of their GDP dependent on exports to the United States. And the other issue that's going to arise is the size of the trade deficit. And although the Philippines does enjoy a trade surplus with the United States, it's considerably smaller, certainly than Vietnam, Malaysia, and some other countries in the region. So bad news for the Philippines. If there's any consolation, though, some of the neighboring countries are likely to be affected even more adversely.
Yeah, we're not alone in this whole gig. China, I believe, would be the next big elephant in the room. The 10% additional tariffs in China come just as the National People's Congress is convening tomorrow on Wednesday, and where President Xi Jinping is slated to lead the biggest political huddle of the year. Having been a trade negotiator yourself, what are Xi's options at this point?
I don't think he's got any alternative other than to respond forcefully to these measures taken by the United States. And China's got a number of different measures it could employ. It could certainly make life more difficult for American companies doing business in China that are largely dependent on that market. It could add countries to the so-called unreliable entity list. And probably the most devastating blow that China could deal to the United States would be to restrict exports to the United States of critical minerals that are important for semiconductors, batteries, and other key items.
All right, but we got a trading bloc that we're in right now, the ASEAN, Stephen. The ASEAN is a trading bloc, and it's been working towards creating that single market and increased trade amongst themselves. Could that be the silver lining here?
Well, I think it's got to be. I think from the perspective of Southeast Asia, you've got to do a couple of things. I think you've really got to look at that internal ASEAN market, eliminate some of the points of friction that continue to exist despite the free trade area, and then also look to diversify, reduce dependencies on the U.S. where possible, diversify trading relationships.
Well, that's the advice there. Diversify. All the best, Stephen. Safe travels where you go. I know that you're going to be heading to Bangkok next for some guidance on trade negotiations there too. Stephen Olsen, live from Denpasar in Indonesia. We have world news coming right up. France is suggesting a partial one-month truce between Russia and the Ukraine. And two high-end Xiaomi phones have been unveiled at the World Mobile Congress. We'll have these and more only here on Money Talks on One News.
Sobrang latida.
Welcome back to Money Talks. I'm Cathy Yang. The Philippines manufacturing growth slowed in February. The S&P Global Manufacturing PMI dropped to 51 in February from 52.3 in January. That's the lowest and slowest expansion in nearly a year. Slower growth in new orders and output led to the decline. Despite this, the sector continues to improve overall. S&P Global's Mariam Baluch says growth has cooled since late 2024. Employment rose for the first time in 3 months, but companies are dealing with more backlogs. Meanwhile, input prices increased at the slowest pace in 9 months, while output prices barely moved. Manufacturers remain hopeful for stronger demand, but confidence is at a 10-month low. Heads up, motorists, fuel prices are going down after 2 straight weeks of hikes. Oil firm Shell, Clean Fuel, Petrogas, Caltex, Sea Oil, and PTT announced price cuts. Gasoline drops by 90 centavos per liter, diesel by 80 centavos, and kerosene by 1 peso and 40 centavos. This comes after recent hikes that added 1 peso and 50 centavos to gasoline, 1 peso and 20 centavos to diesel, and 30 centavos to kerosene. The Energy Department says the rollback is due to weaker demand in South Korea and rising fuel stock in the U.S. Easing global tensions and concerns over new U.S. tariffs also played a role. Metro Pacific Tollways is pausing merger talks with San Miguel to focus on paying off debt. MPTC Chairman Manuel V. Pangilinan says the company needs to raise funds first through bank loans or private placements. The company's debt stood at 145 to 150 billion pesos as of 2023. There's no set timeline for the merger for now, but Pangilinan hopes to finalize it this year. Reports suggest a 90-10 split favoring SMC, though MPTC aims for a 50-50 deal. While Philippine-focused economists say our trade surplus is too small relative to that of China's for Trump to pick on, sentiment has been off risk since Trump got started on his tariff threats. Joining us now here in the studio is Jasper Matthew Bailon, analyst of First Resources Management and Securities Corporations. So good to have you with us, Jas. Thank you so much.
Good morning, ma'am. Thanks for having me here.
You know, I speak with equity analysts day in and day out, and they talk about high dividend yield plays amid all the volatility. But I'm then again seeing the yields on the 10-year bonds, and they look kind of attractive at 6.12. So what is the justification for actually doing an equity play and in the high dividend yielding ones?
Well, actually, during these market downturns and uncertainties, we look at stocks with offers high dividend yield, specifically utility stocks and telecommunication, which are more defensive in nature. So I think right now, most utility stocks offers dividends within 5 to 6%. So it is relatively the same within the treasury bonds. And of course, once the economic landscape improves, equities have a price appreciation as well.
That's a nuance there. Once the economic environment improves, so it's still, we're holding out there what's going to happen with the Trump trade tariffs and the reciprocal tariffs. So what would be the justification for holding equities at this stage, and what would be the investment horizon?
So right now, the current global trade tariffs by U.S. President Donald Trump may bring inflationary pressure in the U.S., which could potentially affect the U.S. Federal Reserves and spill over to other central banks, including the BSP. So on the positive note, the Create More Act may attract more foreign investments in the country, resulting to a higher foreign inflows, which may benefit our stock market.
Exactly. I mean, every single end of the trading day, I look at whether it's net foreign selling or net foreign buying. It's been iffy. I mean, we hadn't really punched above 6,200. What do you think is going to be that catalyst?
So I think Investors are watching the upcoming inflation report tomorrow,
That's 9
which is
a.m.
expected to
Right.
which is expected to be below from January's 2.9, as with the median estimate of 2.6%. So once, I think, manageable inflation may result to BSP to continue its monetary policy easing cycle. So that could be a positive catalyst for the market.
So you're holding out for April 3rd, aren't
Yes.
you? That they would cut rates by 25 basis points.
Yeah.
What about the triple R cut? Didn't that matter? I mean, that's like at least 330 billion into the system
Yes.
for banks to loan out. If
So-
banks were loaning out, because most of them were trying to go for the low yielding ones, but the low return but low risk.
So I think the RRR may boost the economy, as well as it could put more liquidity to banks and capital for the banks to lend money to their lenders. Which could result to higher household consumption as well.
Okay, we have about a minute to go. What is your assessment so far of the local earnings season? As you mentioned, banks.
Yeah, we saw that banks released their earnings season, which is in line with the expectation. So we are optimistic that the profitability of banks may be sustainable all throughout the year due to the current high interest rate environment.
All right, let's keep our spirits up then, because the markets are pretty volatile at this
Yes.
stage, but it also helps that we have someone speaking about it positively. Thank you, Jasper.
Thank you, ma'am.
Matthew,
Thanks for having me here.
joining us here from First Resources Management and Securities Corporation. And you're watching Money Talks. Coming up after the break, the Vatican says Pope Francis suffered 2 episodes of acute respiratory insufficiency. Details coming right up. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. Here are the headlines from around the globe. In the U.S., just an hour ago, Trump pauses military aid to Ukraine until he determines that Kyiv demonstrates a commitment to peace negotiations. The pause comes as Trump clashed last week with Ukrainian President Volodymyr Zelensky. France proposes a partial 1-month truce between Russia and Ukraine as Europe bolsters support for Kyiv amid uncertainties over U.S. support. But the UK says no truce agreement is on the table so far. Meantime, Zelensky expresses hope in U.S. support for ending the 3-year-old war. The wartime leader says he is committed to intensive diplomacy, reiterating security guarantees for Ukraine are a must as part of any settlement. In Japan, the unemployment rate in January unchanged from the previous month at 2.5%, according to the Ministry of Internal Affairs and Communications. This is slightly higher than the estimated 2.4% based on Reuters estimates. Japan's benchmark index Nikkei 225 opens trading lower by over 1%. And in the Vatican, Pope Francis has suffered 2 episodes of acute respiratory insufficiency, a setback for the 88-year-old pontiff as he spends over 2 weeks now in the hospital. Francis is again receiving mechanical ventilation to help with his breathing. The Pope also suffered bronchospasm, which is similar to an asthma attack. A Vatican official told Reuters that his blood tests remain stable. The Pope's doctors believe the respiratory episode was part of his body's normal response in fighting infection. One News anchor Gretchen Ho, who's now in Rome, was able to talk to an expert regarding the Pope's health condition. Filipino Dr. Dex Macalintal said that while the pontiff continues to recover, there are setbacks that need to be taken seriously.
Acute respiratory failure kasi, nangyayari yan kapag hindi nagagawa ng lungs natin yung kanyang trabaho, which is to release enough oxygen into the blood. So, hindi nagkakaroon ng tamang gas exchange. At ito ay dulot maaari, gawa nga po noong pagkakaroon nila ng pagkakaroon ng mucus, pagkakaroon ng pagbabara doon sa daanan ng hangin. Ako bilang doktor, I will still remain very, very vigilant sa nangyayari sa Santo Papa at walang room para maging relax masyado o maging chill. Kumbaga, toxic case pa rin po ito, kaya kinakailangan bantayang maigi ang Santo Papa.
And before we go, Chinese firm Xiaomi has unveiled its new 15 and 15 Ultra smartphones. Tech fans at Mobile World Congress in Barcelona are getting a first look at the devices, and there they are. The Xiaomi 15 starts at 999 euros or over 60,000 pesos, while the 15 Ultra sells for 1,499 euros or nearly 91,000 pesos. Both run on Qualcomm's Snapdragon 8 Elite chip. Xiaomi Spain product trainer Tyler Wood says the Xiaomi 15 has a sleeker design with smaller bezels, while the 15 Ultra features a bigger screen and a 200-megapixel periscope zoom camera. But experts say Xiaomi faces tough competition in the premium phone market.
The high end of the smartphone market is incredibly competitive now. I mean, you've got Samsung, you've got Oppo, you've got Honor, you've got Xiaomi, a number of others, Google themselves. I think differentiating in that premium tier is going to be very, very difficult for all of those players, but particularly Xiaomi.
It's going to be difficult to part away with my hard-earned money. Mobile World Congress runs until March 6. The event showcases more than just smartphones, including digital health and mobility tech. And that is it for Money Talks with Cathy Yang. Catch us again tomorrow at 9:30 a.m. here on One News. We're also streamed live on YouTube and on our Facebook channels. If you haven't done so, like and follow my social media pages. Have a great day ahead.